Welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 7th to the 11th of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. Today, of course, we'll be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll be reviewing the top trades of the week. We'll cover live market commentary, trading ideas for the week ahead, and of course, we'll be answering any questions you have during the course of today's session. So we'll keep it nice and interactive. Any questions or comments you have, do post those into the chat function and we'll go over those during the course of today's session. So first of all, let me introduce you to the Gold and Silver Club. So we are the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, and the Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate a substantial monthly income through commodities trading using our signature trading strategies. So what we'll do before we get started and we go through the charts, we'll have a quick look at the price of gold. Gold is currently trading at $1,269 US per ounce, just off the 2016 highs at the moment. And we'll go over the top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we had a lovely swing trade on light sweet crude oil, which is currently up over 380 points of profit. We discussed this last week, the head and shoulders formation. We finally had a lovely breakout and a follow through from that on Friday after non-farm payroll and after the Baker Hughes data came out, and we've continued to follow through on that just this morning as well. So that's currently in over 380 points of profit. Our gold trade also moved very nicely. We had a pennant formation which developed on Wednesday last week. That broke out, in fact, the day before non-farm payroll. We saw over a 2% move to the upside with gold. Nice breakout for over 310 points of profit, and we continue actually to build momentum to the upside today. And we currently have a Brent crude oil trade on as well. It's now our previous position on light sweet crude oil. The trailing stop has been moved, so that is now a free trade, which has enabled us to take on Brent crude oil, which is currently up over 210 points after again breaking a very critical level of resistance on Friday after non-farm payroll. So that trade is also moving nicely in profit. So what we'll do, we'll go over to the charts. We'll go over some live technical analysis. As always, guys, any questions or comments, do keep those coming in the chat and we shall go over those during the course of today's session. The first market we'll have a look at now is going to be gold. So you will note the pennant formation that we broke out of last week has followed through. That followed through over Thursday. Friday's move, we saw quite a whipsaw move on Friday as we broke out to 2016 highs. We came up to 1,279 US dollars per ounce before closing the day with an indecision candle, but so far during the Monday European session, we've rallied up to 1,270 US dollars per ounce. So what we saw occur on Friday after the non-farm payrolls was a whipsaw move, but ultimately during the session we did see prices break out to 13-month highs, which took gold up over 20% year to date in 2016 so far. We've continued to see investment demand and futures demand in gold as well, which has played a big part in the move that we've seen to the upside over 2016 so far this year. And as we mentioned before, on Thursday gold jumped up over 2% to the upside. Now the non-farm payroll figures which came in on Friday, we saw some whipsaw price action on that. US non-farm payrolls were estimated to have risen by 190,000 from last month, but they in fact increased to 242,000. So with that, we saw quite a whipsaw move on gold, but ultimately as we're entering into a fresh week here, we're seeing some support. Now, if we go over to the monthly chart, I do want to point out to you on gold at the moment, where we've broken above a major level of resistance on the monthly chart here. You will note we've been in this downward trending channel now for gold over the last years going back to 2012. On the monthly chart, we've now actually had a breach and a break above that major layer of resistance. So that is very important for gold here. And we're only about 300 points shy currently from 1,300 US dollars per ounce, which is also a very key level of resistance here. If you have a look at the weekly chart, you will note where we took out major resistance. We didn't close above it, which would have been ideal on Friday, but we are moving back above that level again today. 263 US dollars per ounce was the major swing high previously, which we've now taken out, and you can see gold has the potential in the short term to rally up to the next key resistance, which is sitting at 1,308 US dollars per ounce. That will be the swing high going back to January 2015. So that would be really the next key level a lot of traders will be targeting if we continue to build up momentum, and if we take out Friday's high here, which is sitting at 1,279 US dollars per ounce. You will also want to note that we've got a pennant formation here on gold, and typically a pennant formation like this, we can either see it as being a correction in the market, so we could have anticipated a correction here for gold if we were to have broken the low of that pennant, but as it was, we've broken out from the resistance of the pennant, which is a confirmation that this is a continuation pattern, and this could be the first breather that gold is taking before it really heads significantly higher here. So at the moment, gold is certainly, the overall upward trend is being maintained. The bulls are fully in charge of this market right now. Pullbacks are being seen as buying opportunities. We saw that again on Friday's non-farm payroll. What I'm looking at now as we head into a fresh week is whether we will take out Friday's high here. If we take out Friday's high, we've got the potential to move in excess of 300 points for the next level of resistance, which is sitting around 1308. So definitely watching gold extremely carefully as we head into the US session this afternoon and as we head into a fresh week. Now, I also want to point out to you the move that we've had on light sweet crude oil and Brent crude oil. So we discussed this last week, that we had a head and shoulders formation pattern, an inverse head and shoulders formation, but it wasn't fully confirmed until we broke and closed above the neckline. So what we saw on Friday was finally a break and a close above the neckline. That was really important. We battled with that level of resistance sitting at 34.79. We battled with that with over 4 retests of that zone over the last week and a half, but we've since now broken and had a confirmation close above that level of resistance on Friday. Good follow through as well. So positive numbers from Fed payrolls did also help here to with some stimulus to oil. We saw that certainly in the US session. We saw some good follow through here with oil. Also note, money managers and hedge funds have raised their bullish bets on US crude oil prices to the highest since November 2015. That showed us on the CFTC reports just on Friday. So the speculator group raised its combined futures and options positions in New York and London for a second straight week, adding 39,000 contracts on to 102,000 contracts currently long on oil at the moment. So US crude ended the week up 10% higher. Okay, huge move on oil, 10% higher last week, and Friday's move was a 4% gain to the upside after non-farm payrolls. Now, we also had the Baker Hughes numbers come out, so US oil drillers cut rigs for the 11th week in a row to the lowest since December 2009, which is also significant. The drillers removed 8 oil rigs in the week ending March the 4th, bringing the total rig count to 392. That compares with 922 oil rigs operating the same week a year ago. Okay, so that is very significant. So this time last year, over 922 oil rigs were operating, and this week we have over 300 and just shy of 392 rigs operating. So significant drop, which is again caused a further technical breakout here. We've seen fundamentals also supporting the technicals here, and that has caused some good follow through over the last week. So ultimately we continue to be long oil. As we've mentioned in previous commodities corners, we've been long oil over the last couple of weeks here. We've had a swing trade on as we continue to build a base. Looks like we've formed a double bottom here with oil at the moment. That move that we had on Friday was good confirmation. If you look at the weekly channel, you can see we've got this basing formation. We've now had a good pop above that level, and on the monthly chart too, strong rejection candle going back to February, which is now broken out to the upside. So ultimately oil, I'm looking for more follow through at the moment. In terms of a new position right now, I would wait for a pullback before re-entering. We're just continuing to manage our current swing trades at the moment. If I was going to get in on a fresh position here, I would wait for a retrace back to the lower end of this trend channel and confirmation, and then get back in at a better entry price if oil affords that opportunity. It may just continue to rally from here, but if it does pull back, I would look at pullbacks as buys currently. If we go over to Brent crude oil, very similar situation as well. Brent built up a lot of momentum over last week, right at 37.36. So we looked at this as a breakout trade. If after non-farm payroll we broke out from resistance, and we did break out, we followed through. You can see overall this candle has been a very strong candle, closing right at the weekly highs and the daily highs over a 220-point move. We've already broken above Friday's highs today during the European session, and as we go into the US session, what I would like to see is if we can take out these January highs now and really close above them. You can see we're sitting above those highs on Friday. We've just about breached above them actually. If we can look at the December swing, one of the December swing highs here at 39.70 would be the next key level of resistance here for Brent. Again, unless you're already in this trade at the moment, I would await the next pullback in order to get back in. If you look at the weekly chart, we've also had nice breakout and follow through from core resistance here. So trade and a break above 36 US dollars per barrel has also led to good follow through. And on the monthly charts here, you can also see where we've had a really good rejection candle form just last month as well. So we've seen really good follow through. As I mentioned before, we are currently in these positions. We're continuing to update all of our traders with the trade management around these positions, which we have currently got. Just a quick note for everybody actually on the session at the moment. If you would like to actually get access to those, if you go over to www.theprivatetradersclub.com, I'll continue, we'll move over very shortly to platinum, silver and the grains, but just whilst we're on these questions, I'll go through with you very quickly. You can actually gain access to the trades that we are providing for all of our traders, the trade management around those, exact entry, exit, take profit, all of those are provided at the Private Traders Club. You can also join us for our live trading rooms throughout the week where we go into a lot more detail into our strategies, the indicators that we use, the exact levels that we're getting into each market, the fundamental reasons for those, the technical reasons for those. We go into a lot more detail. You have access to the week ahead trading plan, so we provide a trading plan every single week to all of our traders, which really gives you a very clear plan for the week ahead, including trade management of our current open positions, new positions that we are entering into, any major news items which are coming up the following week. We take it from higher time frame down to the lower time frame and go through each of the trading opportunities in a lot of detail. So that really sets your week up nicely. And you also get access to the Master Markets trading course, which you can go through in your own time. That's all available online, which takes you step by step from everything from risk management through to setting up your charts, all of the indicators that we use at the Gold and Silver Club. We go much more in depth into the strategies that we utilize, the way that we manage our positions, every single part of trade management you're updated on every step of the way, from entry, exit, take profit, whether that is trailing your stop loss, you are updated on every single stage of the process. Okay, so if you would like to find more, you also get access to our VIP email support line where you can get any answers questions, whether those are relating to the trading course, technical setups, market related queries. You are supported every step of the way. All you need to do is just go to ready to get started, enroll here now. So this is just at the bottom of the page at www.theprivatetradersclub.com. Go ready to get started, enroll here now. And once you've gone onto that link, you will just have an application form. You just need to make sure you fill out all the areas of that application form, click apply now, and as soon as that application has gone through, a member of our team will get in touch with you ASAP. Okay, fantastic. So we'll just move it on and we'll go across to now have a look at the other precious metals here. So we'll have a look at platinum. So if you have a look at the platinum price structure at the moment, platinum has also had a really nice breakout. So we mentioned this time last week that platinum was showing us a bull flag formation. Okay, and this is what a bull flag formation looks like. It's when a market pulls back and only to then go higher. So we've seen a breakout from resistance here. We've had a pullback on this price structure and then we've just broken out from resistance and we've continued to follow through. So that's exactly what we've seen here on platinum. We had a decent run up. We've pulled back with a bear flag formation. The upper end of this resistance has been broken and we've followed through really nicely. You can see over the last 3 days, really good breakout to the upside here. So that is what a bull flag formation looks like in commodities, and you can see really perfect technical setup there for a breakout. We've also followed this move via gold as well, which broke out of its pennant formation, but platinum so far, what a lovely move. If we go out to the monthly chart, you will see platinum is making up some significant ground since it produced a very strong rejection candle in January, and so far as we head into March here, we've already broken out from February's highs, and you can see that we've got the potential to then come and retest 1,034 US dollars per ounce, form a basing formation, and potentially break out from that level as well. On the weekly chart, we've had a significant move to the upside as well as we continue to build a base here, and you can see next key resistance above is just sitting around 1,020 to 1,035 US dollars per ounce. So at the moment, it is of course a bit overextended now. If you haven't caught that move from the bull flag formation, it's a little bit late to get into the trade at the moment. So I would be looking at pullbacks as opportunities now to get back in to this trend. If we go over to silver, silver's also had a lovely breakout. We did mention this last week that if silver came back, if it tested previous resistance, then was tested, the previous resistance was tested, we could find new support at this level at 1460, which in fact is exactly where we bounced off last week. We formed a rejection candle and we followed through in a big way over the last week. You can see here, in fact, on Friday we saw over a 2% move here on silver as well, huge breakout to the upside, and currently at the moment you can see where we're making another move back towards the swing highs of February here. We're not too far away. We're about 26 points or so away from actually breaking out from the 2016 highs to date here. So I would definitely keep an eye also on silver. Again, pullbacks will be treated as buying opportunities. Now if I just take you back over to the gold market, you can see again here, if we were to get a breakout from the doji which we formed on Friday, the indecision candle, we could also see some good momentum up here, back up to the 1300 level. I would definitely keep an eye on that. Pullbacks are being bought into. You can see each of the pullbacks at the moment are getting shallower and shallower. You can also draw on these overhead resistance channels, but also supportive channels where we're moving quite clearly at the moment on silver between these channels, between support and resistance. We've had another move on Friday, back up to resistance. I'm looking at pullbacks as buying opportunities, but also a breakout from this zone, we could shoot back up to 1300. So absolutely you want to have gold on your radar this week and as we head into the US session this afternoon. Now we've also had some lovely moves on the grains over the last week, and soybeans really led the way, also helped by the breakout that we've had in oil over the last couple of days. You'll see the huge breakout that we had on Friday. Now soybeans, we did mention this last week that this presented buy opportunities if we came down to 855. This was a very clear support zone where investors were looking to get back into this market at that level. You would see a lot of limit orders, automated trading occur at this levels where you would just see this 855 level be looked at as a value buy here. And we've seen nice follow through. In fact, we've seen soybeans move over 300 points. It is getting back towards resistance now. The contracts are also changing, so we've just seen a rolling over of contracts this week. We're getting back up to resistance. If you caught that move, well done. It was a really nice break out to the upside just from key support here. We're seeing also very similar price structure here with wheat at the moment. Wheat formed a rejection candle on Thursday last week, broke out to the upside on Friday, particularly after non-farm payrolls as well, and so far just forming a little bit of a doji at the moment today. We've also moved across to the new contract, which is why you're seeing gapping on this market. I want to see whether wheat can continue this momentum. There is some overhead resistance here at the moment. It has the potential to rotate back towards the lower end of its short-term trend channel. So just a bit neutral on wheat now, but it's had a good move. If you caught that from the lower end of the trend channel, it's provided a decent swing trade there. And also if we have a look at corn, corn is also of interest here. We've also found key support at the 355 zone. You'll see where we've bounced off that layer, and currently we're just forming a bit of a box and consolidation. I am looking for the potential for corn to follow through here over this week. Note, we've also moved on to the newer contract, hence the gapping on the open, but there is the potential to rotate back up to key resistance here. We've just had a move back down to key support over the last week. So definitely wheat, corn and soybeans all coming off their major supportive channels. Soybeans has already managed to follow through. Wheat could be next, and also corn I would keep a very close eye on as well. So what I shall do, I'll just take you back, guys, before we just wrap it up. I'll just take you over to the Private Traders Club. And if you would like access to the Private Traders Club and everything that includes, which includes access to our live trading rooms throughout the week, so you can also join us for those where we go into our strategies a lot more detail, the exact trades that we're looking to take, the entry levels, the exit levels, take profit zones, the trade management around all of those trades. You get live during the session, you get all of your questions answered. So just essentially that is at www.theprivatetradersclub.com. Once you're there, you'll have this page in front of you. You can also get access to all of the live trade setups that we provide, which include trade management around those, from everything from moving your stop losses, you're trailing up your stop losses for positions, making the most out of your trades, trade management at every step of the way as you take advantage of the swing trades in the market, across agriculture markets, across the precious metals, and also across the energy markets. We're with you step by step, every step along the way as you continue to manage those trades. We provide you with updates. You can also access the Master the Markets trading course that takes you from everything through to risk management to setting up your charts, all of the strategies that we trade at the Gold and Silver Club, how to compound your account, and really teaches you step by step how to trade commodities exactly the way that we do at the Gold and Silver Club to really take your trading to the next level. And as well as that, we provide a week ahead trading plan every single weekend. You get a week ahead trading plan which really sets you up very nicely for the week ahead, ensures you're fully prepared so you don't miss any of the trading opportunities for the week, which includes a review of all the fundamental announcements. It includes review of our current open positions as well as new trades that we are getting into. Again, very transparent on all the entries, the exit, the take profit levels that we have on all of those trades. Goes much deeper into chart analysis and commodity and commentary on all of the commodities that we trade, as well as you also get access to our VIP email support line. So any questions, whether that's on the trading course, the technical setups, or any market related queries, you can have those answered. You just need to go down to the bottom here, just to, are you ready to take your trading to the next level? Click on enroll here now. So once you've clicked on that, you'll be taken to application, and you just want to make sure that you fill in all the fields of the application. And once you've done so, click on the red tab at the bottom, which is just apply here now. And once you click that, a member of our team will get in touch with you ASAP. Now, you can also get in touch with us, just depending on which is your closest office, either our UK office, our USA office, our Africa office, or our Asia office. The UK number is 0207 193 0403. Our USA office is +1 646 808 0403, and our Africa office is +27 11 083 8403, and our Asia office is +852 8191 0403. And all you need to do is just go to www.theprivatetradersclub.com in order to complete an application or call us. So I wish you all a profitable day's trading, and I really look forward to working with those of you who will be joining us at the Private Traders Club. Bye bye.